next module, we're going to cover order types. So for the most of us, we imagine trading as something that we do every day and that we're actively pursuing and executing live all the time. But the cool thing about Forex is that you can tell your phone to open X, like trade when it reaches X point or Y, or when it does whatever you want it to do, and it will execute automatically on its own and run on its own until you decide so. All right? And so the different order types that we're going to be discussing are buy stop, buy limit, sell stop, sell limit, and market execution. Perfect. So let's start with the buys. And it's the same. Once I teach you or we cover a buy stop, it will be the same for sell stop, but the other way around. And once we cover sell limit, it's going to be the same for buy limit, but the other way around. And then market execution is the easiest one because it's the one that you execute live, where you literally press buy or press sell literally with your finger, and it's going to execute at that moment. So buy limit and buy stop could be a little bit confusing at first, but I'm going to give you a tip that is going to help you visualize it immediately. All right? So when you're buying, which is what most traders are used to because of what we've learned so far about stocks, and most people are used to trading stocks or are familiar with the concept, and they've never heard about Forex. And so when they hear Forex for the first time, and they see that you can not only buy, you can also sell, it's confusing at first because usually when you say or you tell someone or you tell a trader to sell, it's basically to exit with profit or with a loss, right? But in Forex, you can actually make money when the market is going down or when it's going up. In this case, we're going to be looking at making money while it's going up. So if we're buying, we are telling our investment, our position. We're entering a trade. We're opening a position in the market, and we're telling it, we're investing, hoping or predicting that it will go up, right? If we're buying, it will go up like this. So hopefully we entered here, entry, and if it goes up, we're making money. But what if it goes down, right? We're not making money anymore, and we'll get to that later. I don't want you guys to get overwhelmed or overcomplicate it. Let's just focus on order types, and then we're going to put all the parts of the puzzle together, all right? So if we're doing a buy, we hope it's going up. So why a limit and why a stop? So when you're telling your MetaTrader on your phone, right, because most traders open their trades there, and we're going to see this. I'm going to show you how you do it, so bear with me, okay? You can tell the trade to open after crossing a certain price point or open after it bounces from a price. And so I'm going to go to the chart and I'm going to show you what I mean. So right now we're looking at Euro USD. And so we could have placed a trade here, right here. When we're looking at the price of Euro USD reach this area of 16160, 16860, right? You can see the price to the right side. And we could have been like, I want to buy, and so that when it crosses a certain point going up, it activates itself. Or I want to buy so that when it touches a point, it bounces in the direction I want it to go, going up, right? Buying. So we could have placed a pending order right here. I'm going to put a line here, or we could have placed an order, pending order right here. And now I'm going to show you, right, what the difference is. So a buy limit, let's start with that one. When you think about a buy limit, the easiest way to remember what it is and what it means is to think about a limit, all right? So when I tell you that this is the limit, like you cannot, let's say you're driving in a highway and it says speed limit 65, right? You see it here. 65 speed limit. What do you think it happens, or what are you supposed to do once you reach 65? You're supposed to like retrace. You're supposed to go back. It's not a permission to go, it's a permission to stop. You can't go beyond the speed limit. So when we're looking at a buy limit, we have to think about a boundary, about a line that it can't cross. It's a limit, right? It's a limit. You can't go past the line. So if you can't go past the line, if you can't go through the line, that means that it has to bounce, because if it doesn't cross, what is it going to do? It's going to touch it and bounce. If it crosses, then it's not a buy limit. It's another thing that we're going to see later. It's not a buy limit. Now, if it touches the line and it stops and it retraces or it bounces in the direction, in this case we're buying, so it's going up, then that is considered a buy limit. And it looks like this. The market is either consolidating or it's going down, and then there's a line where you place your order right here. So let's say this area here is 1.1868, right? And so now you go to your MetaTrader and you're like, based on your trading idea, you're like, damn, it's not going to go beyond this point. Once it touches that point, it's going to bounce and it's going to go up. It's going to it's going to change the trend or whatever it is that you are speculating, right? And so it touches there and then it does this, boom, and it goes up. But when it touches there, it activates your buy limit, because it's a buy that is waiting for the price to reach a limit to then go up. You're buying because it touched a limit that you assigned to it, right? You were believing it wouldn't cross past that point and then it would go up because you're buying. And now it's going to make sense when I explain the buy stop. You're going to be able to differentiate very fast. And so it could also be a consolidation. You're like, you know what? It's not going to cross that point. It's going to go up. And then it touches there, wherever you assigned it, the price, and then it starts going up. That could be another way of perceiving it. So let's say we're at the chart right here, and you see this consolidation right here. You know, it looks like a square. It's very easy to identify because it looks like a square. It's consolidation is moving to the right side. We're going to discuss consolidations. You're going to see what they look like and why they happen and what's the purpose of having them in the market. And I placed a buy limit in this area right here, 15875. You see it on the right side and you can see the red line. And so when it touched there and it didn't cross the line, it bounced up. And so it activated my buy limit, and since it was going up, I profited. Now, The easiest way to understand this is looking at the buy stop. What is a buy stop? If a buy limit is a limit and we compared it to the highway speed limit, now if we're driving in the street and we see a stop sign, what do? We stop and we continue driving, right? We don't stop and turn back like we do with the speed limit, like we're going a certain speed and then we have to stop and lower the speed, go back a little bit or stay there, right? But you don't go past the speed limit. You hope like you go back. With the stop, you stop and then continue, but you have to stop. So a buy stop is a continuation. So it's like the market is going up, and on its way up, you have your order here. It activates and it continues going up. You see? So it's like if you would have placed an order right here while the market was exiting a consolidation, and you said, you know what, in this area right here, whenever it crosses that line, I'm going to sell. Or, that's for a sell stop. Or whenever it crosses this line right here, I'm going to buy. And you see it didn't bounce like it did here, for example, where the market went down, it bounced, and then it activated your order and started going up. That's a buy limit. No, what it did is that it crossed, it went over through your line, right? It touched the line that you assigned the order at, and then it continued going up. And that is what a buy stop is. The same goes for sell limit and sell stop. So the easiest way to visually remember this, we're going to do a little quadrant. And I'm going to show you how the images look. Buy limit. The buy limit, the market is going down. It touches the price that you put the order at, and then it bounces back, right? For the buy stop, the market is already going up. It crosses the area where you assign the trade to activate itself, and it continues going up. You know, the buy stop, this is considered all of these things are considered pending orders. And then for a sell stop or a sell limit, it's the same thing but the other way around. Instead of the market going down like in the buy limit, the market is going to be going up. And then it reaches a limit and then it bounces down and it activates your trade. And for the sell stop, the market is going down already, and after it crosses the price that you assigned, it's going to continue. It's going to activate the trade, and it's going to continue going down. Those are like the way you see it here. It's literally how it looks in the chart. So right here, we could have had the market is about to go down, and let's say this red line that I'm going to make bigger now. Let's say you placed a pending order there that whenever it would touch that area, you would activate your MetaTrader would activate a trade going down. So I would need to place what? Let's look at the graph here or the drawing. So if the market is going up and I want it to reach a limit and then bounce down and I want to make money, I want to do a sell limit because I want to make money while it goes down. So we put a sell limit here, and literally let's look at what it does. Boom. And so we won that trade. So now what I'm going to do is that I'm going to go into further detail. I'm going to go into my phone and I'm going to show you how you execute a pending order. How do you enter a buy limit, a buy stop, a sell limit, and why would you do it? Now, I'm going to show you, you know, everything that goes around it, but I'm not going to show you how to make a full analysis, okay? Because this is not the module that we're going to be covering that. But I'm going to point out reasons why, you know, like if I was doing an analysis, reasons why you would do a buy limit or a buy stop or a sell limit, and how would then you would go to your phone and enter it so that it works out the way you expect it, right? So that when you do it on your own, you're not lost, right? You're going to see it all now. So I'm going to open my phone now, and I'm going to open my trading view in further detail. I'm going to do an analysis with you. So you better just pay attention, okay? Take your notes and follow me through this buy stop, buy limit, sell stop journey, all right? Let's go to the trading view Euro USD chart, and let me start looking for something that I could use to give you an example. So let me eliminate all these lines that are going to distract us. So, you know, one very cool thing about Forex is that people, when they see it for the first time and they don't really understand that much, and then they learn they could make money selling or buying, it blows their mind, you know, because not every market offers you the ability to make money while it goes down, same as when it's going up. So, for example, you can trade Bitcoin, and so the people that entered at $20,000 in 2017, for example, they had to hold their money in a loss. Their equity was in a loss. They were losing money, right? And they had to hold. But for smarter people that knew that the market was going to correct, if they were trading Forex and they selected Bitcoin USD as a currency, because it is a currency, it is a cryptocurrency, right? They could have made money because they were selling. And let's say they entered at 19,927 and they wanted to exit at 16,000 as a price. They had a movement of 3,000 pipettes right there. And if their pips were valued at, or their pipettes had a value of $1, they would have made $3,000, for example. You know, while other people were losing money because the only thing they think they can do is hold their money. But you can trade actively. You can trade if it's going up or going down. The point here is that you have to be right, right? You need, whatever you're telling the market is going to do, the market should do that. If it doesn't, then you're going to be losing money until it goes your way, right? And we're going to cover what a drawdown is and all that good stuff. But as of right now, let's continue with the order types. But I thought it was important for you guys to know that since you're starting out in this week, that don't want you to get confused. You can make money if it's going down or if it's going up, as long as you're right about it, right? And so right now, let's just take this movement here, for example. So one of the things that I teach people at Jet Trades is how to identify trend continuations and start, like enter the market at the best price possible when it's trending down or trending up. So the way that we do that, usually I look for a consolidation like this one. I'm going to use this one as an example of a sell stop. There's a consolidation here, followed by a breakout, and then we have a retest start right here, and then the retest takes place here. And when I usually throw a trend line connecting 2 points of the past consolidation to the 200 EMA, and then connect it with the lower part of where the retest started as a reference to where like the market is gonna go to, right? And so then after the retest takes place and it goes to where I was expecting, and again, This is a pro movement that I'm going to cover later in week 4. But as of right now, I'm using it as a point of reference as an example to set my foundations for what I'm teaching right now, which is a sell stop. And then we're going to cover buy stop and etc. So right here, what I'm expecting the market to do after I make my analysis, it will look something like this. You see, final consolidation, there's a breakout, it goes up, and now I'm expecting it to continue. So let's say I was doing a sell stop. So sell stop, we want it to look like this, where the market, so I would be expecting like the market is going, it's gonna go down, and then at a certain point, while it goes down, I want my trade to activate itself. I wanna enter the market. And then I wanna make money while it goes down because I'm selling. But I don't want it to go down and then bounce like it's doing here. Because if I want it to go down and then bounce and it's gonna go up, that's where I wanna place a buy limit. I'm waiting for a limit and then buy, right? It's a little bit confusing, but hopefully you can replay this video as many times as you want and go over it. You know, this drawing is gonna help you a lot. Just print it out. Documents below, just print it out and memorize how it looks. And that's the only thing that can make you great at this. It's just practicing over and over again. And so right now it's perfect because usually you want to place a sell stop or a buy stop at a trend continuation, right? If I think the price is gonna drop because right now, this is a strategy that I applied for trend continuations, and one of the things that I teach people through the course. So we have the 200 EMA, we have everything perfectly placed. You probably won't understand now, but we have everything in place for it to continue going down. So what I could do, and what you could do, is that let's say you have work this week, and you don't have time to be looking at the opportunity to enter the market. You could literally prepare your trade and leave it there and just go to work and come back on Wednesday and check if your trade open or not. And it would do everything automatically the way that you tell it to do, all right? So if I'm expecting this to go down quickly, so I would say, hey, whenever it starts going down, I want my trade to activate itself right here where the blue line is. And then I would say, based on what you're going to learn later, I would say like, so I want my stop loss to be here. And then based on a past opportunity, a past point of support, I would throw a line here as a take profit. And as you can see, this is the size of my risk. This is the danger zone. This is where I would put my stop loss, and this is where I would put, you know, my take profit. And it looks bigger, so it looks like a great risk to reward ratio, which you're gonna learn later. So I'm like, I'm all in. If it goes well, I want it to activate itself on its way down because I'm trading the market going down. And so I'm gonna do a pending order because I'm gonna be too busy and I don't have time, but this is my trading idea. I feel confident. I'm gonna be working, I don't have time. So I have to put it there so that I don't lose the opportunity. So I go for my trading idea, now I go to the phone. And I'm gonna look for the currency pair the asset that we're trading right now, analyzing right now, it's Euro USD. I look for Euro USD, I click on it, and then I select trade. And then right here, you see that it says market execution, which is one of the ones that we're gonna discuss. You wanna click there above the numbers and below the currency pair, click there, and then you're gonna see the options that I've been talking about for the past 20 minutes. Buy limit, sell limit, buy stop, sell stop. And now hopefully you know what that means. So what are we gonna do? If we're trading the market going down, a continuation, right? Remember the stop sign? We want it to continue. We're gonna do a sell stop. Not a sell limit, a sell stop. So select sell stop, and now we're gonna put our sell stop at 17238. if you can see where I threw the line, where I want the trade to activate, that is exactly the price that we want to enter on MetaTrader. So we come here where it says price. You can see it on the left side. It says price. And we're going to edit that, and we're going to enter, based on the example, 17238. 1.17238. Perfect. And now we are exiting. Our stop loss is above because we're selling. We don't want it to go up because then we lose money because we want to be right. So we're selling. It has to go down. And so sell stop is at 17499. 1.17499, and then take profit is going to be at 16646. 16646. Now everything is set, and now we select the lot size, whatever works, and we basically, as long as we have all the numbers right, we press the button right there. Obviously this is a pass trade, so I cannot place it, but we would place it, and literally it would activate the trade. You would see it on the main page. So you would come here where it says trade, you would come here and you would see it there. All right, we're gonna have on week 4, we're gonna live trade together, so hopefully you can get to see this live and many other examples of live trades that are executing themselves because you told them to do so, right? So this is a very cool feature, and that's how you place a pending order, in this case for a sell stop. And so let's see what would have happened. Let's play it. And so the market was consolidating, and then it's like going down, and then it's getting closer to your line. It's been a few hours because we're looking at the, whoa. So it just crossed the blue line, literally where we had our pending order. So what do you think happened there? So let's say you were drinking a coffee at work and it's 3 p.m. And let's say you get out at 7 and you go home and you're ready to shower and everything, and it's been 4 hours since it crossed your line. What do you think happened? You're gonna go to your phone, you're gonna open it, and you're gonna see a live trade running that opened itself automatically when you told the trade to open itself at the price you assigned the order to execute. And so it's a beautiful thing, because a lot of you are gonna get into this because of the freedom that you want. And pending orders allow you to have that. And hey, if it goes well, it goes well. If it doesn't go well, you learn. And you do your back testing, and you see how profitable your strategy is, and you get better at it, and you keep practicing and practicing and practicing until you become good at what you're doing, which is being a trader, right? So look at this. It goes down, and it's going down, and during all this time, all these hours, your trade is running alone. You're not doing anything. You're living life. And this is making money. You're in a little bit of profit right now. And boom, it's like boom, and it's dropping, and it's dropping. And now it's like, what do you think is going to happen when it touches the lower line? Let's see if it does. It's going. Boom. You just made $10,000. No, I'm just kidding. You just made money. And that's literally how it works. So same goes for everything else. Just follow the drawings that I have here. If you're looking at the market going up and you want it to bounce like it did here, and now you want to buy in the direction of the bounce, then you would do a buy limit if it's going up. If you want it the other way around, it would be selling. And same goes for what I just explained for the sell stop and the buy stop. You just turn it around. Whatever it is, you can just learn one and then apply it, but in the different direction. All right? So I know this is it's a very good explanation, but it's not probably as long as it could be. We could sit down together and trade and do it together, but I know that you can rewind this and play it as many times as you want, and I promise, just trust yourself during this process. I know it's hard. I was there. I was scared, and you know, you heard Kinsey explain the charts, and I might seem like I know all these things because it's been years, but when I started, I was freaking out. So I know where you're at. I know how you feel, all right? It's fine. It's fine. And hey, the most beautiful thing about trading is that you can always trade with a demo account. I mean, don't trade forever at a demo account, but use it. Use it to your advantage because, hey, losing real money at first is going to be frustrating, all right? So don't freak out. Just love the process. Embrace it. Take your time, all right? Drink a coffee, come back. Watch it a week later, print it out, read it. You're going to get used to it, I promise. Trust us, we're going to lead the way and make you a profitable trader, all right? Thank you very much, and see you on the next module. Bye-bye.